Welcome back, everybody. It is good to be back. uh, it's been a while. For those of you that are still with me, I apologize for taking such a long break. I think the last podcast I recorded was it was right before that dump to 3K, admittedly, and I went to hiding for a little bit. And I gotta tell you, I was unfortunately one of those believers in this $6,000 support. Um, it I don't know what to say either. Then I honestly was just following the herd. Uh, Really, I mean the bearish signs were there. They were there. You had lower highs, lower highs, lower highs. In fact, our Ichimoku cloud was telling us to be short pretty much the whole way. You can see we had an attempted edge to edge right around middle of July. You know, we had a little bit of a pump. If you did take that edge to edge trade, you could have taken a bit of profit there. But really, overall, you can see as we're kind of consolidating, you know, we hit resistance here, very bottom edge of the cloud. Again, we hit the bottom edge of the cloud, and then finally we dumped. And oh my, did we dump bad. So I remember right around this time, actually, everybody was screaming, it's the end of crypto, or the end of Bitcoin, or oh geez, I don't know, 1,500 incoming, $100 incoming, crazy things like this, right? And admittedly, I wasn't the most profitable or best trader when I first started the podcast, and you know, and I didn't pretend to know I was the best trader. I didn't pretend that I was a know-it-all, you know, but I do apologize. Me, myself, I lost some money on that same $6,000 support idea. Um, it's a shame that happened, and I went to hiding. However, I am back. I'm trying to block out the noise, trying to keep things macro view and try and keep things on a larger perspective. And so what I thought we'd do for the very first podcast, for the very first episode where I am back, why don't we just reiterate some of the trading ideas that I've kind of been learning. You know, there's a little bit more that I've learned. I have a little bit more experience. I've made some profits. I've made some money. And I'm happy to say that I've recouped any losses that I made previously. And maybe it took a little bit. Maybe took a little bit of time. But at the end of the day, you know, there's always another trade. You can always make your money back. And I don't know what else to say. Let's reiterate some of these trading ideas and trading strategies, all right? So anybody who's listened to my podcast before, or anybody who's been involved in crypto or trading stocks or whatever, may be familiar with this. If not, I'm happy to go over it again. So one of my favorite things is the Ichimoku cloud. Now, if you were to bring up this indicator on TradingView yourself, you know, you just go, oh geez, where is it? There you go. You got your indicators here, right? And you just go Ichimoku cloud. Bam, it's right there, right? However, it comes in with some different settings. It comes in with approximately half the values you see here. Right now, I have it set at 20, 60, 120, 30. Now, the default settings that Ichimoku cloud comes with is geared towards your stock market. So, you know, your opening, it takes into account your opening and closing times for the market, Monday to Friday. Simple as that. And so since crypto is a 24-hour market, We just double those settings, round them off to a nice even number to kind of take into account that, trades are happening all over the world all the time. Crypto doesn't really sleep in a sense. And so the basic idea with the Ichimoku cloud is that you have your, here, let me just, where can I see some good example of that? Okay, whatever. Here's your 2017 bull run, your Bitcoin bull run. Bam. And so there's a couple of things that you can do with the Ichimoku cloud. Essentially, you have your Tenkin, which is your blue line here, which is your faster moving average. You have your Kijin, which is your slower moving average. And you have this weird thing that kind of looks like a cloud, right? Thus, Ichimoku cloud. And you can see that sometimes it's green, sometimes it's red, it's wavy, it's thicker, it's thinner, it's doing all sorts of weird things, right? And it looks really intimidating and it looks scary, but really it's a very simple indicator. And if you kind of want low risk and you want to catch the bulk of a move, it's excellent for that. And I'll show you why. So let's ignore the 2017 bull market. I mean, that was just hysteria. That was madness. It was crazy. A lot of people made a lot of money. However, there was a lot of people. It didn't get to 20,000 unless someone was willing to buy it up there. So all the way down down from 20,000 all the way down to pretty much 6,000, right? And then boom, then we make another kind of range, right? Up to 11,000, back down to 6,000. Up to 9.8, back down to 6, up to 8.5, down, lower highs, etc. So essentially, if we do take a look at this reversal, you can see, you would have seen somewhere in this area, somewhere in this time frame, right around here from the end of December all the way, excuse me, that was my mistake, from, middle of December to the end of December of 2017, you would have started seeing this cloud flip red. And so it would be twisting and it'd be flipping red. And essentially what this is kind of telling you is that, like, hey, look out. We're probably going to see some bearish action in the future. As well as, you could have seen here that our blue line, our Tenkin, crossed below our red line, our Kijin. And that's pretty much a signal to close your long. So if you were long all the way down from here somewhere, right around here, you would have been like, all right, well, I need to get out, right? Now, admittedly, this could have been a little bit too late of a signal, right? But good trading practices, you're taking your profits, you have your stop losses, right? And you're kind of taking chunks of profits the whole way up. And, because the market at the end of the day is unpredictable. Some guy could dump, some guy could dump 10,000 BTC, and market sell it. Who knows, right? And it could absolutely just dump the market. And so, what else is there with the Ichimoku cloud? Now, I want to show you something really cool about the Ichimoku cloud and how it can really help you filter out the noise, really help you stay out of trades, enter them when you want to enter them and when you need to enter them, and exit them when you should be exiting them. And so, sure enough, BTC dumped all the way to 3,000. You got a couple of months here where everybody was screaming it's the end of crypto, alt season, alt dump, all the alts are going to die, blah, blah, blah. Just a lot of negativity, a lot of kind of depressing things in the market. Now, what I want to show you is exactly this right here on April 1st or 2nd or 1st, somewhere in there between the 1st and the 2nd. We had this candle. We had this massive candle that broke from 4,100 all the way to approximately 5,000. Let's call it that, right? And so what you see is, well, maybe before I go over that, let's just go over our edge to edge kind of trading strategy. So an edge to edge is exactly kind of how it sounds. Once price closes within the cloud, there is a higher probability that it will reach this other edge of the cloud, which kind of represents another area of resistance. And you'd be setting your stop losses just below the very bottom of the cloud into the future, obviously, right? So if you entered, let's say you caught this edge to edge, you see the daily candle close right in here, then you're going to have then you would have been long, right? And you would have put your short right down here, right below 3,600. So maybe, I don't know, let's say 35.50. You put your stop loss, right? Now, you can see that it didn't break below the cloud. It did come back down. It looked like it wanted to make an edge to edge here, and it looked like it wanted to keep going. But really, boom, you can see that there's, if we kind of draw a line right across here, I won't even draw a line because trend lines, people are way too religious about them. Let's draw an area, let's draw, I got the magnet on, sorry. Let's draw a rectangular area. Let's draw a rectangular area right here. And let's see, let's make it a, let's make it from 4,000. Yeah. That sounds good. From 4,000-ish to 4,200-ish. Well, we can even put it 4,250. There you go. Now what you can see is, like, obviously there's a lot of indecision around this level, right? You got a attempted retest or attempted break of this level, gets rejected, comes down, boom, retest, rejected, retest, rejected, retest, rejected. And something I've learned myself over trading, I think I've been in crypto now 2 years or so, is that you really need to, if you have an indicator, let's say you're using Ichimoku Cloud, whatever, you really want to combine these all these sorts of ideas. You want to use your basic support and resistance principles. You can use your RSI if you want, given that the RSI is, you can see a pattern, right? And you can play off that pattern. And also Ichimoku Cloud, if you're trying to make an edge to edge, well, maybe think about where previous resistance was, and you can kind of like make a play on that. And so you can see that even though it did come back down, we never broke below the cloud. And sure enough, we kind of like grind a little higher, and boom, break to the upside. And another thing I probably should mention, and it's important, very important, is the probability of your Ichimoku Cloud edge-to-edge trade. The probability of it actually executing and happening is greatly increased. The probability, I'm sorry if I'm a little twisted tongue today. I'm just having a, first podcast in a while. I'm a little bit nervous, and obviously my speech isn't the best. But once this blue line, the Tenkin, crosses over the Kijin, aka the red line, your chances of this edge to edge actually happening greatly increase. And also, so we can see that we had the blue line, the Kijin, cross over the Tenkin, the red line. Price is closing inside the cloud. We can even extend our resistance zone a little bit further here. And you can see that, boom, broke out, and it failed, or sorry, it didn't fail, but it was able to stay above the cloud. And that's a huge bullish signal, right? When it comes to Ichimoku Cloud, this is saying like, hey, start looking for longs, right? And you can see that, we found support around 5,000 ish. 5,000-ish. We found support here. Why don't we just draw another one here? Somewhere around 5,000, something like that, right? Something between 5,000, 5,100, whatever. It doesn't matter, right? It's kind of, and why I'm trying to draw these zones is just because, it's a volatile market, and your candlesticks are going to be wicking into different areas, and they're going to break right back down or break right back up, and we don't know, right? We're just trying to make an estimate of where this kind of price is finding its support. And you can see that we had a Kumo breakout, right? This is your Kumo cloud, is what they call it. The Kumo cloud. You can see that, boom, price breaks up above the cloud, remains above the cloud, and up we go, right? You could have opened a long at 5,000, and you could have rode this thing the whole way up. You could have rode it the whole way up. Now, so most recently we topped out at around 14,000. Now everybody, the FOMO just kicked in here, right? It just kicked in, and everybody's like, "Oh, BTC 50K, got 100K." Some people were saying like reversal at 20K, but still, some people were expecting 20K. However, that wasn't the case. And what we saw a reversal down from 14,000 all the way down to, look at that, our Kijun. And look how precise price bounced off the Kijun here. And this is what you kind of want to be doing. And I realized that on the whole way up, you didn't have any Kijun bounces. And that's what they're called, right? When price kind of bounces off the Kijun like that. You didn't have any on the whole way up, which really sucks because, it would have been nice to, you're getting long here, you're going long here, you're going long here. The only opportunity you really had to go long if you're looking just for a Kijun bounce would have been right here, right around the 96.58 level, right after the reversal down from 14,000. And then we went all the way back up, right? And sure, you could have went long and you could have taken your profits and you could have tried to think, hey, it's just going to keep going up. But in reality, people are going to take profits. And, there's people out there with a lot more money that can move the price in the direction they want. And they will, because when they can, why would they buy Bitcoin at 14,000 if they can really dump it and buy some at 9,000? They can dump it. Or most recently, how it dumped. And who knows what's going to happen now, honestly. So was quite the dump. However, I did kind of expect it. And I'll tell you why. If we look back to just before the 6,000 break, we had a very, very similar pattern. Granted that it wasn't consolidating up here in the upper range. It was consolidating down here. However, given our Ichimoku cloud, we have pretty much bearishness the whole way. Ichimoku cloud is telling us, hey, it's not safe yet, right? But we did, and we had lower highs, consolidation, and then a dump. And it's an awfully similar pattern here. Lower highs. However, we do have the Ichimoku cloud that was green, which is the difference. However, look at this. This started twisting red a couple of days ago. So what's it really telling you? It's telling you that, hey, we have some bearishness happening. And you got to realize also that there's so many people looking at this indicator and that indicator. And so the idea is, if you can, and I'm not saying use like millions of indicators. All I really do is I'll use trend lines, I'll use support and resistance zones, and I'll use the Ichimoku cloud because it can kind of give you a macro perspective on where price might want to go. But I just love how beautifully this kind of showed like, hey, like we're going to have some bearishness coming soon and you should really watch out. And sure enough, it happened. And I want to bring your attention also to the trend lines I drew here. Now I said I know I said that I don't like trend lines, but just bear with me here and try to imagine these as zones, with maybe a wider spread. And although in this case we don't really need to, because this trend line has held up so beautifully, granted that this trend line was drawn, and God, I got I got to tell you guys, and I swear to God, I was going to record the podcast yesterday, and I didn't, because I was supposed to meet up with a buddy for Monday Night Football. However, I didn't get to do that either, because I had to finish up some work and do some late work. So that kind of sucked. But so, I missed out on the podcast, and I really, really wanted to tell you, but like, you know what, like, call bullshit on it if you want, because I know that it's hindsight is 2020, right? But I swear I was going to record the podcast yesterday, and I ended up recording it today because I made a commitment with a buddy to do Monday Night Football with him, which I wasn't able to keep my promise there either because of work. But so Tyler, if you're listening, sorry. I'll catch you for football next Monday, and I'll buy you a beer. But anyways, look at this trend line. It was drawn, and I actually drew this the moment we reversed. So we reversed from 14,000, then we reversed from 13,200. And then so I drew that trend line just based on those two highs, right? One's a high, one's a lower high. Just connected the two, drew the trend line. And then when we bounced here and we came back down, we bounced again, I kind of drew this trend line as well. And so look how beautifully this upper trend line has held. And then also look how beautifully this bottom trend line has held. And so what can we conclude from this? Well, the bulls are saying, oh, there's higher lows, higher low, higher low here even. And then the bears are saying, oh, there's lower highs, lower highs, lower highs, lower highs. So you kind of got two perspectives there. Both these trend lines are holding up nicely. And I mean, it's hard. How do you know, right? How do you know? You can see the zone is also very, very responsive, or at least it was. Now, right now, just before this dump, I like to go on TradingView, and I like to look at the crypto trading ideas. And the sentiment was like, we're going to break up. There's no way we're going to break down, because how can we break down? We're going to break up. On top of that, we had Bakkt, Bakkt launching for institutional investors, with people, for people with lots of money, professional traders and whatnot. And so everybody's saying, hey, Bakkt is going to launch, and Bitcoin is just going to pump. And the thing is that just seemed way too convenient. And I I don't know what to say, but isn't that kind of odd? Isn't that odd that why would why would it, if you're an institutional investor and you're sitting there and you have the capital to pump or dump Bitcoin, why in the hell would you pump it? Think about it. Why would you pump it? Why would you on day one just start piling your money into going long on Bitcoin or buying Bitcoin, to drive the price up? That really doesn't make much sense to me. In the sense that, I mean, if you're playing with $10 million, I mean, 10-20% difference in price is a lot of money. And so why would you drive price up? And everybody expected price to go up, and that's kind of why I was expecting a dump. And I was expecting a decent sized dump. And conveniently enough, pretty soon right after the Bakkt opened for trading Bitcoin. I did open a short, I think right around here, as this candle right here on the 19th of September, as it was kind of creeping up above the trend line, I opened up a short there. I didn't expect to break above this trend line. I mean, it's been respected 1, 2, 3, 4, and I guess on the 5th time I opened a short. Now, granted, you can see that these wicks, they break above, and really you could have people screaming, "Oh my God, it broke the trend line. What about that?" Well, look at the closure. Look at the daily closure. The daily closure is below the trend line, and that's really what matters. That's really what you're looking for, right? Is like these daily closes. So again here, right? Boom. Above, maybe enticed some people to go long, and it dropped back down, and maybe here you could even entice some people to go long, and it dropped again. All right, so I opened up a short just based on, I see that the Ichimoku cloud is twisting red. This trend line is being respected, and everybody expects it to be blowing through the roof right now. And just based on that, I mean, I went short. And I went short all the way down to about 80. I think my target was 8,500 there. And that would be right. Let me just draw a little area here for 8,500. And let's do a $200 spread, for example. Geez, even a 150 spread, whatever. Oh, didn't mean to do that. Apologies. There you go. And so that was kind of my area. You can kind of see over on this side on the run up, we respected the area. We retest, fake breakout, support found, fake breakout, breakdown, boom, breakout, kind of testing here. You can see, boom, test, boom, breakout, up we go. So I kind of based my target off of that. Obviously, I missed a little bit of it. It went down all the way to 8,000 pretty much, but I'm happy. I think I made a 500% return on that short, and man, was I happy. And it was nerve wracking just because, you got the whole world saying Bitcoin's going to blow through the roof. Why would they be wrong, I guess? But it's really important to analyze the market yourself and just make sense of it, even these lower highs, it's they're lower highs because the magnitude of the lower highs is much greater than the magnitude of the higher lows. And what I mean by that is you can see that there was a high at 14,000, then there was a high at 13,000 pretty much, then there was a high at 12,000, 10,000, and that's pretty much it. Whereas your lower highs, I got that right? Yeah, lower highs, you have 9,000, let's see, 9,400, 9,600. Very small spread. And while that might seem to some people as strong support, to me it's kind of like the buyer interest isn't there too much, because I mean they're not really raising their prices up, right? Like price isn't being driven based on those levels. It's kind of just like meh, tinkering along. So enough of the past. Let's try to look into the future and see what could potentially happen. Now, after something like this, after a dump like this, I'd imagine that since we found pretty heavy support right around the $8,000 region, and we did have and the daily candle actually closed at 8,500, and now the next daily candle has opened, and we are going. It looks green. Obviously, it hasn't closed yet. But after a dump like that, I'd expect that there would be a pullback back to this kind of original area of support, which is now turned resistance. So in conjunction with that, we can see that right around that same area, we meet our trend line. Our bottom trend line lines up almost perfectly with our area here. And on top of that, I want to show you guys something pretty cool here, which is just going to give me a little more confidence in this trade, is if we look at the Fibonacci from our high all the way down to our low. There we go. Look at where this level is. This 0.236 level, which is indicating a area of resistance, is miraculously almost perfectly in line with our resistance area and our bottom trend line, and actually the tail end of our top trend line too. So using these, and on top of that, if you are an RSI person, and I kind of am on a macro perspective, you can see that it's severely oversold, right? You have, for the RSI, you have your ranges here. You have between 70 and 30. And, when it's above this range, the asset is overvalued. And when it's below this range, it's undervalued. Now, especially with crypto and Bitcoin, especially, the RSI, if Bitcoin is pumping and blowing through the roof, the RSI can stay up there for days and days or weeks or whatever, right? And it's not really giving you any true signals. However, if we are going to use it in conjunction with our trend lines, our Ichimoku cloud, and our Fibonacci retracements, it's giving us a pretty good setup, to be honest. It's giving us a pretty good setup. And so I actually do have a trade open, and my target is 9,200, kind of this sort of area, 9,200 to 90, let's just say up to this Fibonacci line, 94.48. And I will be taking profits there, and then I will be looking to re-enter at that point. I do have a stop loss placed right below our support zone at 82.15. So we will see how it goes. Now I do believe that if we do break 8,000, I do think that we are going to be seeing 7,000, possibly even 6,000, considering that 6,000 was not even, it wasn't even a area of resistance on our way up. I mean, here it was huge support, and then it just cut through $6,000 like butter. And I just feel like that area needs to be retested. However, we are pretty high up. If we saw 6,000, I mean, that would be awesome. That's a great buying price for BTC. But more likely, I'd say like 7,000 to 7,500, maybe 7,000. If we try to draw another kind of area here, we just draw it like this, sort of. Let's move it up a bit, something like this. And maybe make it a bit skinnier. Let's make it a bit more accurate. Move this here. And then you can see how these levels are just being tested, retested. Some indecision here. You have some up. We find this resistance, break below this support, quickly come back up, test it. We have some indecision, break back down, support, boom, resistance again, and boom, we break through. So if 8,000 gives way, look out for 7,400 to 7,700. Maybe even 6,000 if that area gives way. What else can we go over here? That's kind of my prediction, if you will, on the price of Bitcoin. I've told you what trades I'm in currently. We will see if it plays out that way. And let's see if I have learned anything. I feel pretty good about this last trade. To go against the herd like that is scary, especially because when it comes down to it, you're talking about supply and demand, and if the majority of people are saying it's going to go up, well, that means that they're buying or going long or whatever, right? But at the same time, you got to think that that's not the majority of the market. The majority of the market are the people that have been holding Bitcoin from the early days, or institutional investors, or people with just a large amount of cash. So really, when you go on TradingView and you're looking at these ideas, there's a few people that are accurate and are rational. However, a lot of them are going to give you misleading stuff. It's going to cause you to FOMO. You really need to keep your emotions in check, and try not to hop on this kind of like FOMO trade, fear of missing out. For example, if you saw this big red candle and you tried to, I don't know, short it like somewhere here, I mean, there's a good chance you get liquidated, especially if you're margin trading. I mean, like that's just bad news, right? Especially the volatility. If this is just a daily candle, right? But if we bring it down to 1 hour, I mean, well, geez, there wasn't even any volatility. But I mean, let's bring it down even, because that just dumped like nothing, man. And it dumped, and let's say you try to go short down here, try to go short here. It's just not good, right? Especially in the short term. Price is expected to have a lot of volatility after a move like that, and it will, So try to keep your emotions in check. Try to really paint yourself a picture and respect the levels that you have set out for yourself. When you're setting targets, don't look at the market all the time and be like, oh my god, like price is getting close to my target, should I move my target? Don't move your target. Take some profits. You don't have to close your whole position, but take your profits, move your stop loss down, and then now you're in permanent profit. And if it moves lower, great. If it moves up, well, you've stopped out in profit, and that's a winning trade by all means. For this dump myself, I really wanted to catch the move to 8,500. And I did, and I missed a little bit more of the move, about $500 there. Don't even care. I made a killing, and I'm really happy about it. Also, I guess I should tell you guys, I'm not I'm not rich, and and I don't know what all of you define as rich, but I'd like to get to $1 million at some day. You doing trading, investing in some of these altcoins, investing in Bitcoin, Ethereum, XRP, Cardano. I mean, there's just lots of interesting projects out there that I do think the gains from those smaller projects are going to be way, way, way bigger than the gains you'll see in BTC, because what you're going to see with BTC is, let's say it goes from, right now it's at 8,600, it doubles, it goes to 17,000, and you've only made 100% return, even though it's a good return. I mean, something like XRP, That's only, currently sitting at 25 cents, 23 cents, 22 cents, whatever. I mean, you can take $100, put it into XRP, forget about it. And I do believe that it'll have another run up. And I do believe that it will blow through $3.50, which was its all-time high. I don't know when. However, I do think it will happen. And it's actually right now, all of these major altcoins are so far down from their all-time highs. Like 80, 90%. Ripple, Cardano, Tron, geez, I don't know, IOTA. All of these interesting products that are so discounted right now. And I think if I know you need money to make money in this market. But, maybe instead of going out for a beer, or maybe instead of, I don't know, takeout or ordering or whatever, whatever might cost you 20, 30, 40, 50, $100. Why don't you just step back, grab yourself a pack of ramen noodles, man, and why don't you just invest that? I know it sounds unappetizing, and for me to say that something's going to be something in 5 years seems like a long time. But think of it as, and I'm just speaking from experience, like back when BTC was $3,000 and everybody was freaking that it's the end of crypto, that's when you should have been accumulating, and let's say it does drop down to 2,000, or let's say it does drop down to 1,000. Is Bitcoin ever gonna just drop down to nothing? I highly doubt it. There's way too much capital in this market. BTC is the on-ramp for most cryptos. However, you can buy some directly with credit card or whatever, but that's besides the point. I don't think BTC will die. I think it might dump. I think we might see some better buying opportunities if you'd like. And I guess full disclaimer, this is not trading advice. I'm not a financial advisor. I'm learning. You're learning. Let's learn together. If anybody has some other ideas, any other indicators that kind of line up with what we're saying, right? Because we're trying to use indicators in conjunction with each other to come to a conclusion about what our next target will be. Feel free to hit me up. I'll leave my email in the description because I'm not a big social media guy anyway, so I don't have a Twitter. Well, I do have a Twitter, but I mean, I don't use it. I just use it for following a couple guys in the crypto world. And I have Facebook, but I'm not really on there either, and whatever. And, all that other stuff. I'm just not really interested. I think it's a lot of bullshit, to be honest. However, it can be good, especially Twitter. Twitter is kind of great for crypto resources, and, that's all I really care about when it comes to Twitter. I don't really care about fucking what Kim Kardashian said fucking 2 hours ago. It really does not concern me. So yeah, that's just a suggestion, guys. Instead of going out spending $100, which is easy to do on a night out, put it aside, put it into crypto. Try to make your own conclusions. Try to make some trades. If you want to leverage the Bitcoin that you bought, go ahead and use BitMEX. However, I caution you that you will be tempted to go 100x, just as I was in the past. And please, God, just don't do it. Just please, for the love of God, do not do 100x just because you're just asking to get liquidated, 50x, don't do 50x, 25x. I mean, admittedly, I went 25x on this short up here just because of this trend line, right? It's been being respected so much. And keep in mind, this is on a daily view. Like, this does not apply. If you open up an hour chart, this trend line becomes messy. And if you're watching it on an hourly perspective, well, right here, let's say, for example, right here. Sorry. Right here around the 6th, on the 6th of September, well, technically it broke above the trend line and it retested the trend line. And based on that, you could have been like, oh, well, I should go long because it broke the trend line and now it's retesting the trend line and it's going back up. No, please. This is a macro view. This is how you're going to make most of your profits. I got to tell you, when this was consolidating, it was painful because, you know, you're tempted to make a trade, but really you want to catch these big moves, right? And that's where you're making your money. And it's just way too risky. If you're in this range, like from the 11th of September to all the way to the 23rd of September, pretty much up to the launch of Bakkt, there's like no swings, you know. And if you go long and then you get wicked out down here because you're trying to go long and, you know, the ranges are so tight, you know, like $600 ranges or $500 ranges, which are like nothing in crypto, right? And you're trying to go long and you're trying to catch these moves. You're going 100x. Well, look at this. You get wicked out right here. But really that wasn't anything because it was just a wick. It was just some selling pressure and then it went right back up. But you would have been stopped out if you were at 100 or maybe even 50, 25x there. Right? And so just watch out. I'm going to try to guide you guys through this. I am no professional, and you know, and after 2 years of trading, and admittedly attempted trading and losses, after 2 years, that's when I start making my money back, and now I'm finally in profit, and it feels great, right? After that dump from 6,000 to 3,000, I mean, like I was just like, wow, I just like lost a bunch of money, right? And I really tried to like keep my emotions in check and try not to market buy if you're leverage trading, or even if you're just buying Bitcoin, whatever. Try not to market buy, you know, like set out your levels and put your you know, your buys or your sells at these predetermined levels that you're kind of looking at. And I gotta tell you, if you know, I might have been tempted to go short on the 19th of August here. You know, it touched the top of my Ichimoku cloud, and it would have been a good short, really. It would have been, because it touched the bottom, right? But in fact, I did not go short there because I kind of wanted to see this. I kind of wanted to see, oh, in conjunction with the Ichimoku cloud and the trend line, I can see that there's some resistance here. You know, and we even got the Kijin here, which is also acting as resistance. You can see all these things kind of lining up. In addition, we have the 0.5 Fibonacci retracement, which is iffy. Some people don't believe in it. You know, I'm going to use it for my purposes. But we also have resistance there. So I mean, really, that's kind of what you're looking for. You want your setups, right? You want everything to kind of line up perfectly so you have the highest degree of confidence for trading and to take a position and to make some money. So just like that, I kind of explained to you why I decided to go long from here to my target was 9,200. So I think that's it, guys. What I'm going to try to do in the future is right now it's Tuesday. It's Tuesday evening. What I think I'm going to do is I'm going to record Tuesday evenings, and then I'm going to edit the video and do all that kind of stuff and post it on Wednesdays. And that way we can try and keep it consistent. You know, give me shit if I don't do it. Send me an email. Just and bitch me out because, you know, sometimes I need a kick in the ass too. So all in all, in conclusion, watch out right now. I do expect a pullback to 9,200. If not, we will get stopped out. You know, the losses won't be too great. Actually, I think I entered around like 84 or something. I think I put my stop loss at 85. So, I mean, I'll still get stopped out in profit, but nonetheless, keep your stop losses there. Please, please, please use stop losses. This market can just like reverse on you on any time. And if you have a position, you know, a stop loss because you don't want to take a loss, well, let me tell you, you're going to be getting tons of liquidation emails. Excuse me. And you're going to be so disappointed in yourself. And you know, and I gotta say, like, even if you have $100, you know, and you margin trade it and you do that, you know, be grateful with your 50% profit or your 100% profit. You know, I know you're not a millionaire, but you know, like to make $100 doing nothing is great, you know, and then you have $200 and then you trade that, and you know, you try to build your account that way, right? Be grateful for your profits, take your profits, set your targets, you know, reduce your position at these targets, sell off some of your position, and hold those profits, because you know when it reverses on you, you're gonna regret that you didn't. And it's happened to me many times. And it sucks, let me tell you, it sucks. Okay, so that's all I got for you guys right now. I'll catch you guys in a week. I hope this podcast gains some traction. You know, maybe if it does, I'll open up a Twitter and maybe I can give you guys more frequent updates and give you, you know, frequent market breakdowns. And when moves happen, I can maybe tweet it out there and you guys can be aware of what my current thoughts are. So, thank you. I know it's been a while. For those of you listening, for those of you that are tuning in again and have tuned in previously, thank you. For those of you that are new, whether it be to crypto or just this podcast specifically, welcome, and let's make some money together. Hell, it's an exciting time, and I do think that you know, we can make some smart decisions, and you know, while we may not be calling tops and bottoms, we're going to catch the bulk of the move and we will cash our profits. And that's it. So thanks again, guys. It was great to be back. I'm happy. I am stoked to be back, and happy trading.